Hey there, geopolitics enthusiasts. Today I've got a game changer for you. Saudi Arabia ends the petrodollar deal with the US. Yep, you heard that right. This decision could shake up global economic and geopolitical dynamics in ways we haven't seen in decades. Let's dive in. First, a bit of background. The petrodollar system was born in the 1970s. Saudi Arabia, along with other OPEC countries, agreed to price their oil exports exclusively in US dollars. In return, the US provided military and economic support to Saudi Arabia. This deal has been a cornerstone of US-Saudi relations and has cemented the dollar's dominance as the world's primary reserve currency. So why the change now? There are a few key reasons. Firstly, Saudi Arabia's Vision 2030 plan. It aims to diversify the economy away from oil dependency. By building stronger economic ties with emerging markets, especially in Asia, Saudi Arabia is looking to shape a more resilient future. Secondly, geopolitical shifts. Saudi Arabia is increasingly looking eastward, forging closer connections with China and Russia. This shift is driven by a desire for greater autonomy from US influence and more balanced foreign relations. Another factor, US energy independence. The rise of US shale oil production has reduced American reliance on Middle Eastern oil, making the petrodollar arrangement less critical. Lastly, global currency dynamics are changing. The growing influence of the Chinese yuan and the euro in global trade makes diversifying foreign exchange reserves a strategic move for Saudi Arabia. Now let's talk implications. Global oil markets might see increased volatility as pricing oil in currencies other than the US dollar introduces more exchange rate fluctuations. For currency markets, the demand for US dollars could decrease, potentially weakening the dollar's value. Other currencies like the yuan or euro might see increased demand, strengthening their global trade positions. US-Saudi relations could face strain. This move might force the US to recalibrate its Middle Eastern strategy, potentially leading to shifts in diplomatic and military alliances. Looking at global trade, we might witness the rise of a multipolar currency system for oil trade. This could lead to more diverse and possibly more stable global trade practices as countries become less tied to dollar fluctuations. So what's next? For the US, enhancing diplomatic efforts in the Middle East will be crucial. Forming new alliances or strengthening existing ones with other Gulf Cooperation Council countries might be on the agenda. For Saudi Arabia, diversifying economic partnerships and currency reserves will be key. This could mean more bilateral trade agreements in various currencies and deeper integration into global financial markets. And for global investors, adjusting strategies to account for shifts in currency risks and oil market dynamics will be essential. Diversification across currencies and commodities might become increasingly important. In conclusion, Saudi Arabia's decision to end the petrodollar deal is a landmark event with far-reaching consequences. It reflects broader geopolitical trends and the evolving landscape of global economics. Stakeholders at all levels will need to monitor these developments and adapt to the new dynamics that emerge from this historic shift. Thanks for tuning in. If you found this analysis insightful, don't forget to like, share and subscribe for more deep dives into global geopolitics. Catch you in the next